So last year we wrote that residential values were starting around £350 per square foot, rising to £650 per square foot in the best locations. That's the Thames Valley. This is generally outside the M25. I think certainly what we're finding this year is that inside the M25, West London, and I think it's been well documented now that the central London market, i.e. the Mayfair market, and zones 1 and 2, values are now falling. Our experience outside the M25 in the Thames Valley is that values are actually maintaining quite well. What impact do I think the arrival of Crossrail will have on residential values in the wider residential market? Well, I think what's already happened is that we've seen a rise in values along the Crossrail stretch, so it's already had an impact. It's resulted in developers such as ourselves looking very strongly at the Sloughs and the Maidenheads and some of those more peripheral locations like maybe Langley, maybe West Drayton heading into London a bit further. West Drayton's seen a massive upsurge in values already. There's little areas like Taplow and Iver, which actually is slightly constrained by the fact there's a lot of greenbelt there, so it's very difficult to find opportunity. So there's already been an uplift in value to reflect the fact that Crossrail's coming through. That's developer-led. We actually feel there's going to be another uplift in value once Crossrail gets a lot closer, because the buyers will realise actually the commuting time is going to be cut significantly. So there's still a lot more growth to be had in those areas, especially a lot closer to the time of Crossrail coming through. We talked about the industrial market last year also, and particularly comparables whereby small industrial units were reaching £200 per square foot. That was in Park Royal, which is a very strong area inside the M25. We ourselves had a small unit scheme in Wokingham in the Thames Valley. Existing units which were built, I think about 23, 24 units, about 2,500 square feet. So at the time we owned that asset, we bought it in at £70 per square foot capital value, all in terms of fees. Our last units we were selling off £140 per square foot capital value. So that's really getting back to the peak of the industrial market where it was back in 2007, 2008. In fact, there's probably more growth to be had because there's a lack of supply of small industrial units in the Thames Valley. Within the Thames Valley, office rents in the last year have generally risen as well. I say generally because we've still got areas like Bracknell, which traditionally has got a massive supply of offices and is the last to pick up because it has a lot of existing stock. So rents have risen there, but have risen from a very low base of £15, £16 per square foot to pushing £20 per square foot. But that's really an anomaly for the Thames Valley. If you look at cities like Reading, Reading has exceeded its last cycle. What do I mean by last cycle? The property market moves in cycles. It always peaks at a similar level to what it was before, and it falls back to a very low level. And usually those peaks aren't exceeded. It's just a case of catching up again. So, over a period of 20 years, you don't really get the real value growth. It just catches up again. As a developer and investor, you're always trying to catch the cycle at the right time in terms of making your money and not be caught with an asset at the top of the cycle. We touched on Windsor earlier, where office rents are now hitting £40 per square foot. And we have a particular example there, a building called Admiral House, which is a lovely Victorian former police station. We still have some cells in the basements, which have been converted into storage space. But that adds to the character of the building. So we've acquired that 10,000 square feet of period offices, partly let with a residential consent. And our game plan there was to secure vacant possession and convert the whole building into apartments. And it would have been lovely loft apartments with Victorian features. But during our ownership, and I refer back to Windsor now hitting £40 per square foot, the capital values of our building for residential were circa £600 per square foot at the time of our acquisition. But with the amount of space being taken for permitted development rights in Windsor, the office stock dwindled to the extent that there are virtually no reasonable office suites on the market. So the rents rose during our ownership from early 20s per square foot, so 21, 22 pounds per square foot in our space, to our last letting, which we've just seen through a system at 28 pounds per square foot. During the same time, yields compressed, so perhaps at the time of our acquisition there was circa 7.5%, have now come into 6% and below. So you put that into the equation, now it makes more sense for us as a developer not to develop for residential. It makes more sense for us to actually let our office building at the higher prevailing rents and sell the building as an investment when it's fully let. And we'll end up making similar sort of money from that exercise and actually converting the building itself. And that's an interesting feature of the market now. In those towns of tight supply, tight office supply I'm referring to here, we're now finding actually it pays developers such as ourselves to look at these locations and consider building offices again because the supply is so tight.